Hey guys, welcome to the Multifamily Freedom Chasers Financing Zoom. My name is Shelly Miles, for those of you who do not know me, and I am a commercial mortgage broker and the co-founder of Adventure Commercial Capital. Welcome everybody, thanks for joining us. I'm sure the people will roll on in, but I'm gonna go ahead and hand it over to Jerry here so we can get started. And we're gonna try to keep this at an hour today, but we wanna get started so we can get your questions in. Jerry?
Yeah. Hello, everybody, and welcome. All right, so going to the today's agenda page. So today's agenda, if you've been on any of the Freedom Chasers calls, you know how it kind of works. So trying to get them all kind of running in the same flow, right, Aldo? Just make sure everybody knows what to expect, right, and we'll keep them in time and all that. So we'll be talking a little bit about the ecosystem and what we're building here through the Freedom Chasers, current market update. And then the main topic tonight is how to buy commercial real estate with SBA loans. And then we'll finish it all off with a Q&A.
Sorry, give me 1 second. Bear with me here. I'm constantly having trouble with my...
Yeah, you're good.
There we go.
And so the Freedom Chasers community, is there anybody here that this is your first MFC call? Just throw it in the chat. Put
just throw one in the chat
if this is your first time being on a Multifamily Freedom Chasers call. I think most everybody I saw coming in and that I was letting in come in from the okay, see Scott.
Welcome, Scott. Glad to have you. And Paulette, glad to have you as well.
Yeah.
Awesome. We got a 2, Fred. Are you a newcomer or this is your second call?
This is my second call.
Awesome.
Okay,
Glad to have you. Glad to have you guys.
All right, well, cool. I see Aldo on here. Do you want to do the community portion here for us, Aldo, and introduce everything to everybody?
Yeah, man, why not? Thank you. Appreciate that. So we have what we like to call an ecosystem here. And it's an ecosystem because it kind of goes off in itself, you know, the word ecosystem. There's a lot of codependencies that are happening in a healthy way, of course, between different let's call it different organisms and systems and stuff like that. So what we like to do here is get everybody started off with an activation Zoom on Sunday nights at 8:30 p.m. And this is where the original 3 multifamily Freedom Chasers, the leaders, or the core team, I would say, started off having Zooms. And so this is where they invite celebrity guests to come out and speak and activate us. People that have had, hundreds of millions, if not close to $1 billion in assets under management, people that are into coaching and different areas. And so they come in and they activate us and get us ready for the week. And then during the week, we have calls specific to action taking. If you guys haven't been on here, you'll know, if you guys have been on these, you know how intense they get and how much value we provide. And so the first thing that happens is the first thing you need really is a deal. So what other better way to find a deal than to talk to brokers and ask them what they have going on? So on Mondays at 2, you have broker talks with Pete and also with Ed. They go on there and they call brokers on the Zoom so that you can see how it's done. So you can get some your feet wet in calling brokers, and they'll go over your call if you're calling and provide tips and value for you to be able to do that into the future. Then once you grab a deal from one of these brokers, you need to know if it's a good deal or not. And so you come on over to our Zoom on Tuesday nights at 8 p.m., where we talk about the concept of napkin underwriting. It's a quick but efficient way to know or tell if a deal is a good deal or not, if it's a dud or a stud. And so once you do that, once you think you have a deal and you go deeper into underwriting, then every other Wednesday there is a different Zoom, and they alternate between, of course, the Miles family here, who have Adventure Capital, who talk about the state of the debt market and also different ways of financing. I've found this very, very valuable, even in my own journey. And so you find all kinds of things to learn about when it comes to debt. Because if you have a good deal, you need the money to finance it. So there's no other place like this Zoom tonight to be able to understand that better. And then every other week at 7 p.m. And then every other week, on the flip side, there is an advanced underwriting Zoom with the ninja himself, Victor N to the G, and he goes deep into underwriting. The last 3 or 4 Zooms, we've been going over how to analyze the market before going into the actual deal calculator itself. He's going to continue to do that, and then at some point, I'm sure we'll be able to get into actually underwriting more deeply so you guys can see that. So that's our ecosystem, and guys, this is all free. A lot of these folks have paid thousands of dollars to be able to get this information. And so all of this is free, and it's for you to be able to build your own, get your legs under you and be able to get out of your own W-2, as is our vision. So I think we're good.
Awesome. Thank you, Aldo.
And also, JJ is sharing the link for the Freedom Chasers in the chat. For those of you who don't get the link and the invites and the emails for that, go ahead and click that link, and you'll be on the list.
All right, cool.
Go ahead.
All right, go ahead and switch the page there. All right, I'll go ahead and introduce us and who we are, and then we'll give everybody a chance to introduce themselves. And I'll let you talk then, Michael. I saw you with your hand up there. So that's the Miles right there. Me and Shelly, my wife, and our 2 boys, JJ and Jordan. Our 3rd son, Riley, is on the call as well. So wave at everybody, Riley. So we are commercial mortgage brokers and the founders of Adventure Commercial Capital. We started in this business about 3 years ago. After we were, to go back all the way, we started out in the commercial roofing business. We've been in that business for over 20 years, still in that business. Got started quite a few years ago investing in real estate. Ended up running into some real shysters and things when we was needing some private money and hard money loans. Through that process, we saw a real need for some commercial mortgage brokers to be able to come into the market, treat people right, offer fair rates and terms, and just to be honest with people and not try to take advantage of them. And that's what got us started in our business. And now we've been in this business 3 years. Fund everything commercial real estate involved, from agency debt on multifamily to CMBS, a lot of private money and things as well. So we lend on commercial real estate nationwide. Go ahead and flip the page. So this is our contact information. It's my phone number, my email, Shelly's email. So if you want to take a screenshot or a picture of that, if anybody wants to get a hold of us, those are the best ways to do it. And you can go on to the next one. And so we got time for probably 2 or 3 people to take about a minute each and tell us about yourself, introduce yourself, make yourself known here in the community. I can't stress how important that is. We do know people here in this community that have met each other on this call. here locally and are now doing business together. So no matter what kind of business you're doing, let us know about it. Tell us a little bit about yourself. And I see you with your hand up there, and I'm not sure how to pronounce your name. So go ahead and tell us how to pronounce your name and introduce yourself there.
Hey, my name is PJ. I am
Okay.
from San Francisco Bay Area. I am into childcare preschool business, formerly high tech. So I own 2 active Primrose schools in the West Coast. The third one is opening soon. I own a couple of triple net childcare centers and a retail center in Bay Area. I am new to multifamily investing. This is my second Freedom Chasers meeting. I attended the Michael Blank last Sunday activation meeting.
Awesome. PJ, it's good to meet you.
Thanks. And I've done SBA loans, by the way. All my deals, all owner occupied deals, I've done SBA loans. So that's why I'm super
great.
interested to learn more.
Great. Okay, cool. Cool. And Michael,
Hey, Jerry, man.
how's it going,
Shelly.
Michael?
Good, brother. Good, brother. Nice to meet you, Riley. A beautiful family. So I just wanted to really quick, just underscore what Aldo was saying earlier. You guys don't realize, those who are new to multifamily, how important these calls are. We pay thousands of dollars to get this knowledge. They're stringing everything along, from acquisitions, operations, to capital stack, and how to get these deals under contract and close. So I want to make sure that, you guys don't take this for granted, right? You make sure you get on these calls, you network, put your information either in your name, like Aldo does, right? I see Aldo, you have your information in there, your social media, your number. Put your information in the chat. Network with people here, right? And then you ask questions, definitely reach out to Jerry. I'm surprised Jerry gives out his number, right? Like, hey, this guy is like an amazing guy in community, and he's so much, and he's so amazing. So, Jay, I'm glad to my friend, buddy, and you have a beautiful family. And I just wanted to just give you a heads up and thank you guys for doing this as always.
I appreciate you, Michael. Thanks, man.
Yeah, and Michael is in Mexico right now, living the life.
Nice. All right. Yeah, go ahead and go back to that current debt market page.
There's one more. Here we go. Let's get.
Okay, yeah.
Hey, I'll do it.
Oh.
Sorry.
You're muted.
Yeah, let's try that again. Take 2.
Sorry.
Hi, everyone. I'll keep this short. I'm in Massachusetts. I came across this. I belong to the Rockcliffe Club. One of the warriors there kind of led me on to this, this group here, and this is my second call, and I'm loving it already. I think the ecosystem that you guys put together is awesome. So I'm looking forward to a lot of new sessions. One of my superpowers is underwriting. I'm multifamily. I'm going after multifamily. I have several myself, but I'm just looking to step it up a little bit and looking to connect with folks that can find deals that need partners and even fundraising. So looking to connect and looking to get into the system. So thank you very much for pulling this together, guys. I really appreciate it.
Yeah, awesome, Fred. Good to have you here. All right, cool. So go ahead. All right, we'll get started. The current debt market update. As everybody knows, the rates are up. As far as overall, the rates are up. In the last 9 months or whatever it has been here now. We've dropped a little bit. In some areas, just because the Fed rate is going up, but some of the other areas like the 10-year Treasury is going down. The SOFR, different ones are going down a little bit here and there. And the 10-year Treasury has gone down about 20 basis points here in just the last few days. So, so a lot of the rates are going down, from where they were a month ago. But still, you know, it's not enough to do much as in comparison to where we came from. So, you know, when we look at a 10-year treasury rate, that's where we get our agency debt from. You know, I tell people generally to figure, you know, 1.5% to 2.5% over the 10-year treasury is where you want to figure your rates are going to be if you have a property that qualifies for agency debt. So, you know, looking at this here, I mean, you could be as low as 5% almost on a on agency debt right now. So the SOFR rate is what a lot of our bridge lenders use and gauge off of. They'll be, you know, anywhere from 3 to 5 over SOFR, depending on the deal. You know, and rates are up. What's that mean? You know, that means right now is what it means is a lot of deals just aren't getting done. We're kind of in a lull or a stagnant place right now where you know, buyers are not paying the higher prices and sellers aren't wanting to take the lower prices, and so everybody's just kind of staring at each other right now, waiting on stuff to happen. So, you know, in the mortgage industry that we're in, that means that mortgage originations and things are down. And, you know, in some products as much as 95%, and just about all the products at least 80%. So, you know, I keep thinking we're going to be hitting a point where banks start laying people off. A lot of these mortgage originators and the loan officers and things at banks. If the rates stay up where they're at and we don't have any volume starting to take place, I think we're going to run into a situation where a lot of the smaller banks and even some of the bigger banks are going to start laying off mortgage originators and processors and things like that, which is just going to add to kind of the mess that the Fed's creating. But you know, but that's where we're at. You know, a mortgage, somebody that, you know, last summer could have qualified for $1 million mortgage is like a $500,000 or $600,000 mortgage they can qualify for now. So, you know, that's on the housing side. On the apartment side, a property that might have been a 3 or 4 cap is now a 6 or 7 cap. So equity is lost and just kind of vanished overnight. So, you know, we have some lenders that are getting more skittish, you know, and then we have, you know, our government-backed lenders like Freddie and Fannie that are now, you know, trying to pick up and do more. You know, there's been years where Freddie and Fannie have lent all their money out. You know, by this time of the year, they've pretty much lent all the money they had out, you know, for the year. And right now, they're still trying to catch up from last year, that the money that they didn't lend out. So just not a lot of deals getting done. So, but I will say Freddie and Fannie are trying to lend more on the smaller properties. You know, 5 to 50 units. They each have their own goals that they're wanting to lend out on those this year. And they've not backed down from that. They've had other things that they've put out and they have backed down from. If some of you guys were on here at the beginning of February and I said, Freddie Mac small balance loans, they've come out and they've said twice that they're not going to raise rates the whole month of February. And their lowest rate, you know, that you could have gotten the 1st of February was like a 4.8. Well, by the 2nd week of February, they had raised rates twice and they were up, you know, 5 3/4. So the market's just so, you know, I can't think of the right words, but it's all over the place right now. So, and a lot of the lenders are getting more skittish on locking in rates. So, you know, where they used to be able to put you under contract and then we take, you know, 4 to 6 weeks, sometimes 2 months to close a loan, you'd be locked into rates that whole time. A lot of the lenders are, you know, leaving that open to, well, we're going to be X over SOFR. We're going to be this much over the 5-year, the 10-year. We're going to be this much over the prime, you know, when it comes closing time, and they're not giving you a dead, you know, a set rate that they're going to close at. So it's kind of what where the market is. You know, leverage has gone down because of the DSCR. And things are fluid, so. So getting into our the meat of conversation for the night is SBA loans or the Small Business Administration. These are government loans. They're backed by the government, and they're there to serve an underserved small business community. The small businesses are a pretty risky proposition for most banks. You can't go into most banks and you tell them you're a small business owner, and good luck. And that's where the SBA kind of came in, because they saw a need for this source of funding for small businesses. So SBA loans are all personally guaranteed. Loan amounts from 50,000 to 5 million. And I'll show you. I mean, you can get funding through SBA, as much as 10 million. I have some lenders that say they can get it up to 15 million. But in general terms, 5 million is kind of the cap with SBA. They have fixed rates, adjustable rates. Most banks and SBA lenders you go to, you're going to have adjustable rates, and you're going to be, usually on a quarterly. You'll have a fixed rate for 3 months, and it'll switch every 3 months. Some are monthly. All the different SBA lenders, whether it's a small bank or whether it's a large bank, or there is some SBA lenders out there that are not bank affiliated, and they're just an SBA lender, and that's all they do is SBA loans. So it's kind of all over the board. Rates, right now 7.5 to 12. They're kind of all over the place as well, depending on what you're borrowing on and what SBA program it is. So go ahead and go to the next page. And I'll kind of go through. I was hoping I don't know if Maya is on here. If you're on here, Maya, raise your hand. Maya sent me a message and said, I bought a hotel on an SBA loan a few years ago, and I wouldn't wish that on my worst enemy. So I was kind of wanting to hear her feedback and what her experience was like. But I do know that SBA gets a bad rap in a lot of ways, and I'll kind of tell you why, from what I've seen on why they get a bad rap. And some of these statistics are kind of surprising, because you think, all banks all banks advertise that they do SBA loans from what I've seen. But yearly, only 10 to 20% of all banks close an SBA loan. When you go to your local bank branches, and I mean, you can try this going into a bank branch and just tell them you want an SBA loan. And generally they're going to have you fill out a form with just some general information. And then you're going to have to wait on somebody from a main headquarters to get a hold of you. And a lot of these banks might only have 1 or 2 people, nationwide that take care of their SBA program. And so it's kind of underserved in a lot of the bank branches. And I think a lot of the reason is that the SBA loans are a lot of work from the banker's perspective. There's a lot of paperwork, and it's really it's an intensive and very intrusive process underwriting is to the borrower. And also a lot of the banks, in all fairness, I mean, everybody's heard, bankers working bankers' hours. Most of them are salary employees or paid hourly. And so, that whole going over and above and beyond, trying to get somebody funded just really doesn't benefit them personally. So a lot of the times, once the banks start working on an SBA loan, it just kind of dies right there. So You know, and then when you look at a bank that does lend on SBA, they usually have one or two different types of businesses, or maybe, you know, they might have 5 or 6 different types of businesses that they like to lend on because they know that product. So, I mean, there's so many different businesses out there and so many different, you know, ways to look at things that it's hard to be an expert on a lot of them. And these banks, you know, they can only, you know, let's say they have a guy that is good with, you know, hotels or gas stations or whatever. That's going to be what they go after and what they look at, you know, as far as the SBA loans. Anybody else that comes in, unless it's just a prime candidate and a home run for them, they're really not going to mess with it. So, so that being said, you know, we lend, we have 11 different SBA lenders that we have relationships with. We have 2 of them that love hotels. We have some that like storage and RV parks. We have some that like, you know, medical. If it's medical, I know one of them that I like to take them to, because that's kind of their niche. You know, and some of our SBA lenders work for some of the biggest banks in the country. And I'll tell you, if you go to the bank to get an SBA loan, you're not going to be able to find the guy that we talk to. And I'll tell you, we deal directly. I'll just give this name out. We deal directly with Wells Fargo. And we know the guy personally that is in charge of all of Wells Fargo SBA lending. If you go to a Wells Fargo branch, that branch doesn't even know who that guy is, because we've had customers that have come to us. We've been turned down by this person and that person. We got turned down by Wells Fargo, and then we went and turned around and got them approved by Wells Fargo, because we know the guy that is head of lending for SBAs at Wells Fargo, and he deals directly with brokers. He don't like dealing with his bank branches. So there's a lot of nuances and a lot of reasons to come to us instead of your local bank for SBA. And the biggest reason is we don't get paid unless we get your money for you. So, you know, if you come to us and we work 3 months on a deal for you and we don't get it closed, we worked 3 months and we didn't get paid. But I guarantee you, we worked our butts off trying to get it for you because we want to get paid, you know. And so the bank, the teller, the person at the bank that's doing your SBA loan, you know, won't care as much as we do because they're getting paid salary. So that's just my little rant on why you need to pick us to do your SBA loans. So, but go ahead and flip it. So there's 2 different types of SBA loans that we deal with. I know that they have some smaller, like quick kind of money SBA loans for businesses, but the 2 that we deal with are the 7A and the 504. The 7A, you know, you can do a purchase of a business or a property that has a business attached to it for as little as 0 down. And even some cases, you can get money back when you close a loan through a 7A program, because they have you know, working capital and things like that that you can get along with your loan. On the 7A loans, the rates are always adjustable. These loans are more for the intangibles. Like I said, you can get money back for, you know, kind of business or putting money into your business. You know, we have these can do business acquisition, working capital, refine, you know, current debt, purchase equipment, supplies. You can also use these for purchasing real estate. You know, you can use these to purchase real estate. Rehab for a business, purchase business for a real estate. You know, the gentleman a few minutes ago talked about purchasing daycare centers with SBA. So you can purchase a building, rehab the building, you know, and in some some instances, you can even get through the 7A program. If you need money for cash flow for your first year of a new business, you can get some of that money back as the loan closes. You can get some cash infusion. So go ahead and go to the next page. The 504 loans are more for the bigger stuff. The hard assets. So your real estate, big equipment purchases for a business. This will still do. It'll still do rehab projects and things. The difference between the 504 and the 7A program, if you're doing a rehab project with a 504 loan, they're going to be there and watching over and making sure that all the money that you had for this project is being used for what it was supposed to be used for. A lot of times with the 7A loan, the 7A loan is going to cost you more, but you don't have to answer as many questions, and you don't have it's not as intrusive. But with the 504, you can purchase businesses, commercial real estate with as little as 10% down. When I'm saying these things, 10% down, 0 down, they're still underwriting the business, just like you would underwrite like a multifamily deal. You underwrite a multifamily deal, you need a DSCR of 1.2, 1.25. With an SBA, you're underwriting a deal. A lot of times you can get away if it's a 1-to-1, and they think that your stuff that you're doing is going to add to the income. You can sometimes get away with a 1-to-1 debt service or a 1.15. I've seen them talk about a 1.2. But they do a DSCR on a SBA loan as well. The rates on a 504 aren't always fixed, but we have one SBA lender that can fix rates for up to 25 years. And these can be business acquisition, purchase real estate, equipment, major fixed assets is what the 504 loan is for. And something else to keep in mind with the SBA loans, I don't know that there's another loan that is really as, borrower friendly when you look at, how much they're trying to help you. I mean, this is a loan that is made to help the small business community. So, there's a lot. You can get a lot more out of an SBA loan as far as a little bit of money down. They don't look at your, you can buy commercial real estate. Let's just for an example, through a regular commercial loan, you're going to need to show a net worth equal to or greater of the value of the loan. An SBA, that's not the case. So usually a quarter. Like if you can show a quarter of the net worth of what the loan is, a lot of times that's going to work for you. So go ahead to the next slide. Types of real estate that you can buy with an SBA. Any real estate being purchased for business purposes can be used for SBA. So we talked about the daycare centers, hotels, self-storage, RV parks. If it is investment real estate by name, like a multifamily deal or just an office building, that's not a product for SBA. If you're purchasing a property, any type of business that you're putting in, maybe a construction business and you're wanting some warehouse space. If you purchase this property, you've got to occupy that construction business that's using the SBA program needs to occupy 51% or better of the property to be able to use the SBA loan. They can rent the other 49% of the building out, but they have to occupy 51% of the building or more. And something else to keep in mind, that construction company has got to, their income has to qualify for the loan. If you're renting 40% or 49% of the building out, you cannot use that income from the rental to help cover your DSCR with an SBA loan. So just little nuances that to keep in mind if you're looking to purchase something with SBA. But yeah, hotels, self-storage, adult daycares, those are getting more and more popular as far as a business idea. If it's a business that uses a real estate, you can use it for you can use an SBA loan. I've even seen I saw a YouTube video not too long ago where a guy actually, that was his plan and invest in real estate, was he was buying businesses that had a real estate attached to them. And then he would separate the business from the real estate, sell the business off by itself and hold on to the real estate, and just lease that space out to that same business, so he was going through and buying up as many businesses as he could, and then just keeping the real estate. And a lot of times he would, do a couple changes to the business and be able to sell the business for what he originally paid for it for, and then keep the real estate. So a lot of creative ways that you can do things with SBA. So needed for a quote for SBA. Before we can even get a quote from an SBA lender, this is the things that we're going to need. 3 years tax returns from the buyer, personal and business tax returns. And I didn't add it on here. From the buyer also, usually when you're buying a business or some type of real estate for SBA, you're going to need to show a resume, your personal resume of they want to know that you're going to be able to run and handle whatever it is that you're purchasing. You can get away with it if you have, let's say, if it's a hands-off type business and you have a good manager in place, but you've had experience managing other types of businesses. Sometimes you can get away with not having experience in a business, but a resume, personal taxes for 3 years. From the seller, if it's an established business, you're going to need their tax returns as well. Personal financial statement from the buyer. I did put it on there. Buyer's resume, up-to-date profit and loss. So if they filed taxes, and now we're in April. So you would need a profit and loss like from January to April of the year, running profit and loss, and an itemized breakdown of what is needed and what you're needing funding for. So, and this is where it starts with an SBA. Once we get these things, we can get a hard yes or no, and we can get terms on an SBA deal. So go ahead and go to the next page. We keep this on here. This is the heart of our business, is multifamily. So if you're coming to us for a multifamily debt, these are the things we need to be able to get a quote together for you on multifamily. I will say a lot of our lenders right now are getting slower and slower and slower. When we have a deal that comes up that is a little more difficult, maybe it's got a little more nuance to it. They're getting a lot tighter on those types of deals, and they're just taking their time. Seems like everywhere we go, they're taking longer and longer right now. So we're pushing. I'm making phone calls twice a day to the same lender. Hey, you got our stuff? You got our stuff? You got our stuff? And it's just they're taking longer. It's just maybe it's spring break. Maybe it's that they're everybody's kind of waiting the market out. I'm not sure, but just be prepared for that. We're working to speed everybody up around us, and we're working from sun up to sundown, and even after sundown most nights. But a lot of these lenders aren't. So, but needed for a quote: T12s, rent rolls, an OM. and then a summary of what you plan to do with the property, before we can, move forward with application and things like that. We can get you a quote with those things. But before we move forward with application and things, we're going to need personal financial statements, and the schedule of real estate owned from, the KPs or the general partners on the deal. So. And so, anybody have any questions? Go ahead and raise your hand or just start talking.
I've got one.
Yeah, go ahead.
Actually, it's from Mario.
Okay.
He said, I'm looking for it. He said, does this apply for property management companies?
Oh, like as far as to buy a multifamily or to buy their own facility to work out of.
Mario, if you're on here, you can raise your hand and we can bring you up.
Okay,
Yeah.
there you go.
Yeah.
Good. There you go. First, thank you guys again for, this is the second time I've been in this group or listening here, so
Awesome.
formative. Yeah, the question that was, remember when you indicated 51%? So I was thinking if I have a property management company, I acquire 51% of it as my property management and then I manage the rest. And then can I also, which was my second question, can I do it as, I think I wrote there 503 C, no, 50, what is it? 501c3. So there you go.
Is that a
Nonprofit. I want to be like the Catholic Church where I.
yeah, these
Yeah.
have to be for, I didn't mention that and I should have, but these
Yeah.
SBA is for profit.
Oh,
Yeah.
well, my property management part can be for profit.
Yeah.
But I can't acquire it under the right, since it's a nonprofit, and I can't do it that way.
Not through an SBA. Yeah.
Gotcha. All right. I was a mortgage banker for 15 years, so I was just kind of curious how you structure it. Okay.
Yeah.
Thank you.
And each of our SBA sources will structure things a little different. We're brokers and we go, directly to the lending sources. But as far as how they each structure things a little differently and have their own systems in place of how to underwrite things and all that. But yeah, I don't have anybody that'll do a nonprofit through SBA. So.
Yeah, the other thing, Jerry, you should really point out, I mean, I was a warehouse funding, so I was a mortgage banker, not a broker.
Yeah.
And the obviously using you guys is a fantastic tool. You go to your local bank, they claim, everybody claims they can do anything. But when you go hard and put in money, and then at the end of 6 months, they say, oops, we can't do it. That's why you guys are so valuable to use your service. I mean, that's way, if you say it's pretty, it's done deal, you're pretty much going to be done. You know what I mean? It's not like, I dealt with in the 80s and 90s, commercial, and I used to amaze me. They'd send 6 months to a year, and then they say, oh, sorry. You could have told me that from the beginning instead of going 100,000 into it to find out you're not going to lend. Yeah.
Yeah, I appreciate that. Ayana.
Hi, good night, Jerry and Shelly. Thank you again.
Yeah.
Question on refinancing. Do you see any restrictions or stipulations regarding refinancing once you've gotten an SBA loan?
As far as like prepayments and things.
Right, or yeah, like
Yeah, they'll use.
Finance for a certain period of time, or there's.
Yeah, the SBA. Sometimes depending on how your SBA loan was under, how your docs are done up. Sometimes SBA, you can only pay off like 20% a year of the SBA loan, or they are going to hit you with some fees. So if you go to refinance, sometimes it'll be like a 5-year prepay, sometimes 10, sometimes 15. But I know a lot, especially the 504 loan, they'll have long periods of, like a prepayment penalty that you'll have to pay on them. But if you have an SBA loan currently, I mean, you could send it over to us and we can look at it, and I can kind of let you know what that would look like as far as, do you have one currently that you're looking to refi?
No, I don't. I'm just thinking ahead.
Yeah. Oh, okay. Gotcha. Yeah. Yeah, they do have they're long drawn out loans. And like I said, I know a lot of people and a lot of small business owners that take them out, they like to pay things off, and they don't like that debt holding over their heads. And so the SBA has a lot of stipulations on prepayment. So, some of the numbers that I've seen have been, if somebody that wants to pay a loan off early, they might have it to where you can only pay 20% extra principal per year. Some of them are 10, they have a lot of stipulations like that. And that's something to look at when you are getting one, to just kind of see where all those things come in. So.
Thank you.
Yeah, for sure.
I got a question on here.
Okay.
A couple people has asked this question now. They say they're pretty sure that you're not able to buy a multifamily apartment complex with an SBA loan, right? So just go ahead and answer that.
Yeah, no, multifamily, no investment real estate. It's only business purposes. So, the hotel works because the hotel is its own business, right? I mean, you can, run a hotel out of a property and not own the building. I mean, that's its own property, and, I guess you can make the argument with an apartment building with a master lease or whatever too. But the SBA doesn't look at investment real estate as a business. So sorry about that with we have,
Thanks. I had to go.
my, Shelly's mom lives with us and she's got dementia, and our other son is supposed to be keeping an eye on keeping her from coming in. She comes in and asks questions generally about every 5-10 minutes. So she broke away, snuck around him, I guess, and asked questions. So, but yeah, any other questions?
I do have another one.
Okay.
Since it's a personal guarantee,
Yeah.
it's contingent on, is there like a range of minimum credit scores to qualify?
Yeah, there isn't a credit score like that is put out by the SBA in particular, but each bank or lender will have their own credit score that they use, and what they'll have like a minimum. I tell people that just, if you're wanting to do anything commercial real estate involved, work on getting your credit up. If you're shopping for commercial real estate, go through a credit cleanup, whatever. The higher your credit score, the better off you're going to be. You hear people like Grant Cardone that says that, I don't need credit. I don't need this. I don't need that. Well, he doesn't now. But when he first started buying commercial real estate, and he was getting agency debt through Freddie and Fannie, I mean, you've got to have a 660 or better, 620 or better credit score. So it's very important to have a good credit score. The bank's going to look at it, and if you're sub, a 700, they're going to be asking questions more than likely. So.
Yeah, the ones I've spoken to has been 620 or higher.
Yeah.
The lenders, SBA lenders.
And usually if it's under 700, I mean, you're not going to get the best rates. You're not going to get the best terms. It's just the way it is.
Last question, I
Yeah.
think. would residential assisted living facilities qualify?
Yeah, those will qualify for SBA. Yeah. Yep, sure will.
That's a good question.
Yep. So.
All of your questions are good, not just that one. I was just
Yeah.
saying. All right, any more questions, guys?
So
We've
I
got 5
appreciate
minutes.
everybody being here. Our next Zoom is going, you go ahead and slide the page on. We're going to be talking about our fix and flip loan programs. And JJ, our 17-year-old, is going to be presenting that day and talking about SBA, or talking about fix and flip loans. So we'll see how he does. And
There he is. It's a
He can teach
handsome fella. He didn't know I was gonna put this picture up. But he
He's
used to
gonna do great.
Oh yeah.
he used to do acting and stuff, so he has all these professional pictures taken. So, all right, JJ, I'm sure you're enjoying that. Go ahead and throw the freedom chasers in the chat, JJ. Oh, we got
I see
somebody here.
somebody, Taisha.
Yeah.
I see your hand up. Go ahead and ask your question.
Can't hear you.
We're not able to hear you.
Can you guys check my comment in the chat? I'm working right now, so it's kind of loud, but I'm tuning in. So if you can't hear me, can you guys check the chat?
Oh, the chat. Okay, hey, she said in the 700s to get great rates for loans. Sorry, she can't unmute herself. She said in the 700 to get great rates for loans. Oh, does it have to be in the 700 to get great rates for loans? That helps.
Yeah, I mean that's very important. That, and then having a good deal. Yeah, a good deal is important. Having cash on hand. You know, when we talk about, well, you can do a 504 loan with 10% down. I should specify, bring 25%. Have 25% sitting there. You're going to use 5% in closing. You're going to use 10% for your cash infusion, and it looks very good and is needed if you have the other 10% to have cash in the bank. And that's going to help your rates and terms as well, along with making sure that the property that you're buying or the business you're buying has good cash flow. And then you yourself having your own personal finances in order. I can't stress that enough. You know, as we're going down, you know, as the economy is kind of taking a turn, you know, the Fed, you can make the argument. I mean, the words they use is, oh, we're trying to slow the economy down. Oh, we're trying to slow this down. We're trying, you know, and when they're using that word, it's we're trying to crash this part of the market. We're trying to hurt that part of the market. And we don't want people to have as much money in their pockets. And, you know, we don't want them to have equity in their homes and all that kind of thing. You know, is a real way to say it. You know, but having all those things in place, having your own personal financial house in order, is so important. I can't stress it enough when you're going to do these loans and get things done financially. And I will tell you that no matter where you're at, personally, with your financial situation, pretty much everybody is less than a year away from having a good credit score if you educate yourself a little bit. So, I mean, unless there's something really bad that's happened to you, you know, I've seen people with, you know, judgments and things against them. But if you don't have anything like that, I mean, even a bankruptcy, you know, even if you have a bankruptcy on your on your record, you can still raise your credit score and make your credit score, better. So better than it is. So, Christina, how are you?
I'm doing well. I had put a question in chat. I just, because this actually, I guess, is my first time here. And since
Awesome.
I was interested in multifamily, I just wanted to confirm, to verify that because at the very last slide, when you were talking about rates and things,
Yeah.
or things you would need for loans, that your company, which I'm assuming is Adventure Commercial Capital, does lend for multifamily apartments?
Yes, we lend on multifamily, and we've been doing Zooms twice a month for the last you said 6 months, right, Ben? Yeah, for the last 6 months, and just about everyone we've talked about multifamily. And I said, well, let's change it up a little bit and make it more interesting. So tonight was on SBA loans. So,
But it was good to know that the, residential assisted living could fall under an SBA loan, because as you mentioned, that does seem to be an area that becomes of a need as we're going forward with our aging population in this country. So
yeah, for sure.
and thanks for the great information.
Yeah,
Thanks
great.
for joining. Good to have you.
Yeah, good to have you here. All right, Fred. Oh, you are muted.
I did it again. Sorry about that. Hey, maybe this is a question for offline, but I'll ask it anyway, and you tell me if it's offline. So I'm working on a deal right now to try to submit an LOI. It's about a 7 something million thereabouts. About half of that I can get an assumable loan at a very favorable rate. What are my options? How much of the remainder do you think I can get a secondary loan, or whatever you call it, second mortgage on it? What's your thoughts there?
What is the first debt, like the assumable loan? What kind of loan is that?
It's a fixed rate loan for 9 years.
Do you know what program it is? Is it a bank loan, or is it through Freddie or Fannie? Or
I think it's an agency loan.
okay.
I haven't confirmed that, but I think it's an agency loan.
Gotcha. Yeah. Some agency loans, it's something we'd have to look in actually in the contract of the mortgage.
Okay.
And some of them allow secondary loans to come in, or mezzanine debt. Others don't. Even through
Okay.
agency debt, some of them will, some of them won't. And I will tell you, so I'm guessing what, 3.5 to 4 million is what the assumable part is.
Correct.
And so then you're looking at, needing to raise 3.5 to 4 million.
Yeah, you got it.
And so I will say that's kind of borderline on the amounts. We have companies that do mezzanine debt. I have one company that won't do mezzanine debt under 50 million a pop. And then the others, usually they want to be part of a deal where they're offering more than 3 million a pop. The mezzanine debt is generally for like your larger projects, 10 million plus, in loan amounts. And then your mezz part would be, 3 million or more. So that's kind of where you're kind of on the borderline there of being able to find somebody, because you have somebody coming in to get you to the right DSCR, because then adding mezz debt, you'd need to still qualify like at the DSCR.
Yeah.
And then you're looking probably getting $1 million, $1.5 million, and there isn't, you might be able to find somebody out there, but I don't have anybody out there that would do that. Like I said, our lowest amount so we can go to for mezz debt is like 3 million.
Gotcha.
Yep.
Okay. Yeah, appreciate that. Thanks, Jerry.
Yeah, no problem. All right.
Hey,
Well,
hey Jerry, can I ask a quick question?
yeah.
Not sure if it was covered. Our SBA 504 loans, are they assumable, the SBA portion?
The SBA portion of the loans, I am not sure. That is
Got it.
something
And
I've never dealt with on an SBA loan.
got it.
So,
Go ahead and put your name and number in the chat and we'll
Yeah.
find that.
I will get an answer on that for you. But I'm guessing if they are assumable, it would be more of a loan to loan type of thing, and not all of them would be assumable. So, but that is something I don't know. We're lending brokers. So like as far as an assumable loan, we don't make any money on an assumable loan. When somebody assumes a loan. So that's really not
Correct.
anything that we normally do. So, but
Correct.
I can get an answer to that for you for sure.
Thanks, Eddie.
Yeah, for sure. So PJ, all right, cool. All right, well, it was good to have everybody on here. And if you guys go ahead and go to we'll go ahead and you can slide through. Encourage everybody that get as involved in the community as you can. It's a free community, and they offer more content and things than a lot of the paid programs that I've been a part of and seen. So, it's a really cool program that we're involved with here, and we're definitely blessed to be a part of it in the way we are. And we're glad to have everybody here, and we just want to keep growing the community, and collaborate with each other. We're in Grant Cardone's real estate club, and something he says all the time is collaboration is the new currency. So collaborating with people, and joining forces to be able to take down bigger deals and all these things, and to do more business is very important. And we're looking for new ways to do that through our business as well. And we'll probably be bringing out, and we might mention it our next Zoom, something that we've got to where we can kind of collaborate with all of you guys and kind of help grow business together that way. So, but it's been great to have everybody on here. Join our Sundays, Mondays, Tuesdays, and Wednesdays. We got calls, and like to see everybody on there. So.
Yeah, next week is Victor. He is great. I want you guys to join that. It'll be awesome. He has a lot of great information. Next Wednesday.
Victor's a smart guy.
We won't be on, so Victor will be. And we're kind of playing with the idea of changing our Zoom time from 7 to 8 because of West Coast time. Everybody gets off at 5 o'clock, and 7 o'clock here is 4 o'clock there. So if we do 8 o'clock here, it'll be 5 o'clock there. So, but our next Zoom is at 7. Our next one is at 7 with JJ, but we might change it after that. So just keep that in mind. And thank you guys for joining. Here is our information again. Go ahead and take a screenshot of that. JJ also threw it in the chat. JJ, if you can go ahead and throw the Freedom Chasers in the chat as well so people can get that link. I'll give you guys a few seconds. Thank you all for joining.
Thank you.
There you go. And have a great week and weekend, guys, and happy Easter. And I'm going to leave with some music. I'm going to give you guys some music. Hi, Peter. I see you.
Hey, Pete.
How's it going?
Good.
Good. Are you still on vacation?
Just got home, just literally hit the driveway from the beach. So we're back.
Nice.
Nice. Oh, wow. Good.
Nice.
And I kind of had it in my head that you guys were at 8 o'clock. That's why I forgot that you guys did yours at 7. So, but
Yeah, I think we need
that's
to
all right.
make that and change it.
I think it'd be better just because everybody else's calls are 8 o'clock and
Yeah,
through the week, and it'll keep it uniform.
that'd be awesome. That'd be awesome.
Yeah.
So
Thanks for
good job,
joining,
guys.
guys.
Yep. Y'all have a great Easter and a great rest of the week.